September 3rd, 1556, Seville, Spain. A treasury official named Diego de Vargas sits at his desk, surrounded by ledgers he has been staring at for 3 days straight. Outside his window, the largest fleet in the history of the world is being loaded at the port. Silver. Tons of it. More silver than Europe had seen in 1,000 years. Enough to pay every army on the continent twice over. Diego de Vargas knows something that almost nobody outside this room knows. It is not enough. The debts are larger than the silver. The wars are more expensive than the mines can cover. And the most powerful monarch on earth is about to do something that no one will admit publicly for another 50 years. He is going to default for the first time, but not the last. Spain would default on its debts 14 times between 1556 and 1696. 14 times. The most silver-rich empire in the history of human civilization. Bankrupt. Repeatedly, structurally, inevitably. I've been researching this for months, and what I found genuinely changed how I see everything happening in the global economy right now. Because the mechanism that destroyed Spain, not the wars, not the corruption, not the bad luck, the specific financial mechanism underneath all of that is running inside the American economy today. The numbers are updated, the currency is different, the century has changed, the sequence is identical. Stay with me, because by the end of this video, you are going to understand something that most financial analysts are not saying out loud. The world's reserve currency is not just a privilege, it is a trap. A specific, measurable, historically documented trap. And the evidence that America has already walked into it is hiding in plain sight. But first, you need to understand what Spain actually built and exactly how it destroyed itself from the inside. Here is what almost everyone gets wrong about Spain's collapse. The popular story is simple. Spain got lazy, spent its silver on wars instead of building real industry, and eventually the money ran out. It's a satisfying story, but it is missing the most important part. Spain didn't fail despite having the world's reserve currency. Spain failed because of it, because controlling the world's monetary base changes the incentives of everyone inside the system in ways that are individually rational and collectively catastrophic. That distinction is everything. Let's go back to 1492. Columbus lands in the Caribbean. By the 1530s, Spanish conquistadors have dismantled the Aztec and Inca empires. And underneath those civilizations, they find what they were looking for. Silver deposits so vast that the Spanish could barely process them fast enough to ship them home. The Cerro Rico mountain in Potosi, Bolivia, the rich hill. At its peak, this single mountain was producing 60% of all the silver in the entire world. One mountain, feeding the monetary system of an entire planet. Between 1500 and 1650, Spain extracted approximately 16,000 metric tons of silver from the Americas. 16,000 tons. Converted into coins, the silver real de a ocho, what traders everywhere called the Spanish dollar, and distributed across Europe and Asia through trade and military spending. Here is where the mechanism starts. Spain had a problem that felt exactly like a blessing. They had more money than their economy could absorb. So what did they do? They spent it on wars, on palaces, on the most expensive military in European history. The Spanish Habsburgs were fighting in the Netherlands, in Italy, against the Ottomans, against Protestant Germany. 4 fronts simultaneously for decades. And every time the treasury ran low, another fleet arrived from the Americas. But here is the critical part. The part Diego de Vargas understood that the king did not want to hear. When you flood a system with money, prices rise. Economists call what happened the price revolution of the 16th century. Between 1500 and 1650, prices across Europe increased by 300 to 400%. Not because Europe had become more productive, simply because there was dramatically more money chasing the same amount of goods. And here's what that did to Spain specifically. Spain's own industries, its farmers, its craftsmen, its textile producers could not compete anymore. Why build anything in Spain when Spanish silver could buy the same thing cheaper from England or the Dutch Republic? So Spain didn't build one. While Spain was spending its silver on wars, England and the Dutch Republic were building industries, trade networks, banking systems, the kind of productive infrastructure that generates wealth that doesn't depend on a single mountain staying productive. By the mid-1600s, the irony had become impossible to ignore. Spanish silver was flowing out of Spain just as fast as it flowed in. to pay for goods Spain no longer produced and to service debts Spain had taken on to fight wars it could no longer afford. The silver went in, the silver went right back out. And then Cerro Rico started slowing down. By the 1620s, silver production from Potosi was declining. The most accessible deposits had been exhausted. Extraction was getting harder, deeper, more expensive. The flood that had sustained the empire for a century was becoming a trickle. And Spain, which had built its entire political structure, its military commitments, its debt architecture on the assumption that the silver would always keep coming, had no backup plan. The debts came due. The payments couldn't be made. And Diego de Vargas's ledgers, which had been quietly telling the truth for decades, were finally impossible to manage away. Now, here is America in 2025. America's version of Spanish silver is not a metal. It is the privilege of issuing the world's reserve currency. Since 1944, when the Bretton Woods Agreement made the dollar the center of the global financial system, America has held an advantage no empire has held in quite this form. Every country on earth needs dollars to buy oil, settle international trade, hold foreign exchange reserves. The dollar is the Spanish silver of the modern world. Economists call this exorbitant privilege, a phrase the French finance minister coined in 1965, already noticing that America could consume more than it produced, borrow more than any other country, run deficits that would have collapsed any other currency, and just like Spain, America has used that privilege to spend rather than to build. The numbers are not abstract. America's national debt has crossed $36 trillion. In 2000, it was $5.6 trillion. In 2010, $13 trillion. The trajectory is not linear. It is accelerating. America is adding approximately $2 trillion in new debt every single year, not in a crisis year, in a normal year. Interest payments on that debt crossed $1 trillion annually for the first time in 2024. $1 trillion per year, more than America spends on its entire defense budget, just to service existing debt, not to reduce it, not to invest in anything, just to prevent the hole from getting deeper faster than it already is. And here's the manufacturing parallel that should stop you cold. In 1979, American manufacturing employed 19.5 million workers. Today, approximately 11.5 million, 8 million jobs gone. The productive industrial base has been systematically hollowed out, while financial services, which move money and extract fees but produce nothing physical, expanded to fill the gap. America discovered that having the world's reserve currency made it cheaper to buy things than to make them, so it stopped making them, exactly as Spanish silver subsidized Spain's dependence on foreign goods. But here is the part that makes this structurally urgent, not just historically interesting. Spain's collapse was triggered by one specific thing, the moment Potosi started slowing down. When silver production declined, the subsidy hiding Spain's structural weaknesses was gradually withdrawn. The debts became unserviceable. The industries that had never been built weren't there when Spain needed them. And crucially, the silver didn't stop suddenly. It declined gradually. Each year's production slightly lower than the year before. Each individual decline easy to explain away. The total trajectory was catastrophic. Now ask yourself, what is America's version of Potosi slowing down? It is the global willingness to hold dollars. The dollar's share of global foreign exchange reserves was 72% in 2001. Today it is approximately 58%, 14 percentage points gone over 24 years. Each individual year the change is small, easy to call noise, easy to explain away. But the direction has not reversed. It has not paused. Every single year the dollar represents a slightly smaller share of what the world chooses to hold. Central banks, not speculators, sovereign institutions with multi-decade time horizons, have been net buyers of gold for 5 consecutive years at record levels. China, India, Turkey, Poland, simultaneously reducing dollar holdings and accumulating the one asset that cannot be sanctioned, cannot be frozen, cannot be devalued by another country's decision. They are watching the silver slow down, and they are positioning accordingly. Saudi Arabia, whose 1974 decision to price oil in dollars built the petrodollar system, is now accepting yuan for oil sales to China, a structural crack in the foundation. And the Moody's downgrade of America's credit rating in late 2024 was not a warning. It was a measurement, a formal acknowledgement that the gap between America's reserve currency claim and its fiscal reality has become too large to manage quietly. Spain's treasury officials in 1620 understood the trajectory. They could read the production numbers. They managed the gap through accounting, through borrowing, through optimistic projections for decades, because admitting the truth would have required dismantling the entire political structure that the silver had built. America's $2 trillion annual deficit is the same gap. The math does not care about American exceptionalism. It does not care about the strength of American institutions or the depth of American capital markets, all of which are real, all of which will slow the transition significantly. But Spain had the most powerful military in Europe. Spain had genuine global commercial reach. Spain had centuries of institutional development. The math didn't care. Here is what Spain's story actually teaches us about how reserve currency empires end. They don't end in a single catastrophic moment. They end through a slow, decades-long erosion that is invisible quarter by quarter and undeniable only in retrospect. Spain's decline from its peak in 1580 to its final bankruptcy in 1696 took over a century. Individual years looked manageable. The total trajectory was irreversible. The dollar's displacement, if it happens, will also be measured in decades. No alternative has yet achieved the depth and liquidity of American capital markets. But Spain's merchants in 1620 could have made that exact argument about Spanish silver, and they would have been right in 1620. The trajectory, not the current position, is what determines the outcome. Spain had the richest mountain in the world, and it used that wealth to avoid the harder work of building a sustainable economy. America has the world's reserve currency, and it has used that privilege to avoid the harder work of fiscal discipline. The silver always runs out. The question is whether you've built something real to replace it before it does. Subscribe if you want to keep following this, because I'm tracking the exact financial mechanisms connecting what happened to Spain in 1600 to what is happening to the American financial system right now. And I want your argument in the comments. Spain used its silver to fund wars and avoid building real industry. America uses its reserve currency to fund deficits and avoid fiscal discipline. Is the parallel exact? Or is there something America has that Spain didn't? Something that genuinely breaks the sequence? Drop your answer below. The most compelling argument gets pinned.